welcome to the B2B Growth Blueprint podcast, where we talk with entrepreneurs, founders, and leaders at B2B services, tech, and SaaS companies to learn the systems and processes they've used to create success for their business. We'll also learn from marketing and sales experts to provide insights to help you grow your business. I'm your host, Mark Osborne, and the podcast is brought to you by Modern Revenue Strategies and their 10x ROI B2B growth guarantee. Schedule a free diagnostic call to learn the fastest path to double your B2B revenues in just 90 days. Hello, and welcome to another episode of the B2B Growth Blueprint podcast. I am your host, Mark Osborne, and today I'm very excited to welcome my guest, Carter Gaither. Now I'm going to read Carter's bio to make sure I get this right because he's done a lot of stuff. Carter is a results-driven executive with deep expertise in corporate strategy, finance, and organizational transformation. Over his 25-plus year career, he has built and led value creation strategies for middle-market companies, directing successful merger and acquisition pipelines and structured transactions that delivered meaningful shareholder returns. His leadership roles span managing director, chief finance officer, and chief operating officer positions, where he has driven operational turnarounds, implemented enterprise systems, and executed growth strategies across biotech, pharmaceuticals, consumer products, and financial services companies. Carter's experience includes guiding companies through private equity sales, negotiating debt and equity offerings, and creating innovative investment programs. Earlier in his career, he contributed to high-profile sports franchise acquisitions while at River Cities Capital Funds and Arthur Andersen. He's a Boston University graduate and former varsity swim team captain. Carter remains actively engaged in coaching, nonprofit board service, and community leadership. So Carter, welcome to the show.
Thanks for having me, Mark.
Yeah, absolutely. I've been looking forward to this conversation. So before we dive into some of the topics that you've got a lot of expertise, I know our audience is going to gain a lot from. Tell us a little bit about, sort of your career path and what brought you to where you are today.
So, yeah, I've kind of weaved in and out of boom and bust since I got out of school, and ended up where I am out of just luck, maybe misfortune. So did the thing, worked hard, got into Big Six, and had was in DC when I did that, and got into the world of leverage buyout venture capital. Okay. And then, parlayed that into working for a VC firm here in Cincinnati, where I was from. I'm, at the end of the day, I'm a good Cincinnati, and I did what everybody else did. I moved away. I found a great wife, and moved back. So,
upgrading the neighborhood as you go.
Upgrading the neighborhood. That's it's actually part of what we're supposed to do. You get that at birth. You get instructed at birth. So. And then got the itch to get in on the build side and the investee side, and went to work for a startup, which by the time I got in there and accepted, turned into a turnaround, and a re-envisioning of the business. And then that was my first jump into healthcare, pharmaceutical, drug development, and then kind of built a career around founder-led organizations, helping them get to their next step, whether it was turnaround, taking risk off the table, selling outright. And that's where I am today. I've been doing that work for the last 15 plus years.
That's great. So it's interesting to sort of hear your perspective from kind of both sides of both funding or being funded, and the sort of different perspectives that comes in. And both of us kind of work in the exit space, where we're helping companies prepare for exit. And one of the things that people always want to do, but it's very hard to do, which is time the market. Because a rising tide raises all ships. If you could sell at the right time, as they say, it makes a big difference. But that's fundamentally a pretty hard thing to do, and in fact is sort of overestimated in terms of its ability to impact the success of your sale or recapitalization or other M&A activity. Talk to us about what the market looks like now, and we're in August of 2025 as we're recording this, so heading into fall of 2025. How are you seeing the M&A markets or private equity markets?
Yeah, I would say that in the lower middle markets, that M&A activity is, I would say last year was frothy. There was a bunch, and I would say that this year it's not come to a complete stop, but it's there are a lot of questions out there, and a lot of these companies are, I don't, fragile is probably an okay term to use. And so, the questions around tariffs. I mean, there were what's that, and that put a freeze. I mean, that was like, well, we don't know what to do. What do we get? What interest rates? How are we, what's happening with the interest rates? And so, and then you're seeing just trepidation maybe, and like now's not the time, right? Capital's not flowing. The deals that are getting done are, I would say, are more strategic. You're not getting max value, full buyouts.
Yeah.
And so, another bite of the apple type deals are what you're seeing, but it's certainly not as plentiful as it was last year.
So that might not be the most welcome news to a founder who's like, "Wow, I really wanted this to be my last year in the business." But many many founders, operators can recognize that it's probably worth continuing to stay at it for a while and get the most from the opportunity. So no reason to rush it. And oftentimes they say a 3 to 5 year timeline is really what most companies that have successful exits operate
Yeah.
on. So given that that might stretch what was originally a 3 year timeline into a 5 year timeline for some folks. What do you advise, companies that you work with or, other people that you advise? What's the best thing for them to do in this environment that's going to really set them up for the greatest success when maybe the market conditions change a little bit, or, even just to sort of prime them for that, kind of one in a million unicorn opportunity that does come along,
Yeah.
given that it's not as frothy as it was this time last year?
So that question makes me, I mean, kind of points me back to, or brings back memories of one of my mentors when I first started my career. And um, they the partners called a happy hour on a Friday afternoon at like 3 o'clock, and I wasn't
That's either
ready.
really good or really bad, based on places I've worked.
Yeah, no, I mean, it's time to be social. We busted our butt. It's time to be social. And let's do it now. And you know, it took me like, I don't know, 20 or 30 minutes to like wind down and get ready. And my mentor came over and was like, "It's time to go. What are we doing?" And I said, I had to wrap up this email and I had to do this and blah blah blah. And he's like, "No, always be ready. Always be ready." and and that stuck with me, not just be ready to exit the office, but just kind of as a philosophy on on building business. From there we got into Sarbanes-Oxley, right? I was at Anderson, and so we all know what happened there, and then Sarbanes-Oxley was born. And the counsel that we provided post Sarbanes-Oxley was, look, if you're not a publicly traded company, you need to act like a publicly traded company. You may not be spending all the money and making all the all that investment, the unnecessary investment, but you need to act like a company. And that's my counsel to to companies now that are like, yeah, you know what, I see an exit coming down the road. I'm 60 years old. I want to go do these things. This has been my life for the last 40 years. And so I see it coming down the road. And even startup companies, people that are like, hey, this is, I'm going to start this up and flip it in 5 years. Um, My counsel is always be ready. And so what does that mean? And that means that, look, you want to be in a position where if you get that offer, if an offer comes across the phone, you're ready, right? And you're going to get maximum value. And so you need to operate as if you're for sale,
Yeah.
or you can withhold, or you can withstand a process. And so so today, when you said don't time the market, and I think that's great counsel. I mean, you never want to time. You're not timing the market. I'm not selling in a year, but I'll be ready to sell in a year, and maybe that turns into three, and maybe that's a year and 3 months,
Right.
whatever it is. But you always want to be ready.
So that's really good advice, obviously. And the thing that it also occurs to me about that is the things that you do to be ready are actually things that just make it a better business to run today.
Yeah,
And oftentimes, one of the biggest, challenges that business have when they get ready to sell is this owner dependency. And owner dependency means you can't go on vacations. You're always, feel like the roof is caving in on you. If you can, either build a support team or build the systems and processes that aren't reliant on you or any one key person, that makes it a better business, and it also makes it more enjoyable to run. And I think there's lots of things like that
right.
that are ways to not only improve the experience of running the business today, but that also pave the way, for better exit or M&A or recapitalization or any of those sort of activities. So, what's one of the things? What's one of the biggest tips that you would give? If a company's like, all right, I do want to make it a better business today, so it's more enjoyable to run today, but also a better sale in the future. What's
Yeah.
one of those kind of biggest tips that you might give to someone?
So I think there's like a 1 and a 1A,
Yeah.
and you
Okay.
touched on it. You just touched on it. But when you're getting ready to sell your company, think about it as you're telling somebody a story, and
Okay.
you want, what is your story? Is the main character your story? Is it you, or is the main character the story of the company?
Yeah.
And if you look at it and you say, hey, the main character is me, you're not ready, right?
That's right.
You're not ready. If the main character of your story is the company, and it's the people getting opportunities to develop, it's the sales are scalable and sustainable. You're in the right industry, you're in the right market. You have the ability to pivot, navigate the grays. If that's your story, then you're well on the path. You're ready, right? And
Yeah.
and regardless of what the market says, you're ready. And so I think that's one. I think that's one is who's the main character of your story. The second piece is, and I have a bias, but I view the back office, I view the finance department and the accounting department as an opportunity to drive investment. And that's easy, right? Oh yeah, of course you got all the cash and you put in money and no, 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 no. It's do you have the right people in that group that are thinking strategically about how to grow the company, and so FP&A is a big piece of that, but you can carry that across. You can carry that across the group. What's your AP person doing? Are they just paying bills?
Right.
Or do they have a good understanding of impact of cash flow and needs and growth and AR? What's the timing on the AR? I mean, can we negotiate better terms? Can we keep that cash in the company? Are you thinking strategically in terms of looking at the sales? What are those? What sales are driving revenue? And and what's, where are we spending money, and where are we losing money, where are we gaining money. And so it's really an opportunity right now, I think, to be able to look at your back office and say, hey, are we strategic? Are
Yeah.
we, you know, I'll go and I'll talk about, old world CFOs as historians, right?
Okay.
Accountants
Okay.
are, they're historians. They tell
That's
you
right.
what
What happened?
happened.
Yeah.
And there's value in understanding what happened. Those who don't learn their history, yada, yada, yada. That said, it's that really have an opportunity there to be proactive, to say, okay, we know the history, here's the impact. If we make these changes, these things can happen. And we can take a center within the organization. It's really been an expense center. It's been a cost center, and make it a center of investment and return,
Yeah.
and really drive value. And I go to, a great example of that was a company that I worked for, and they were in drug development, and the average customer spend in this space was $2.5 million over 5 years.
Mhm.
Nice little chunk of change. Um, this company was only capturing the first 6 months of that spend and getting $250,000. And we started to ask why. We started to notice that, and we started asking why. And well, there were gaps, right? There were gaps within the offering. And so how do we fill those gaps? And what's the analysis that we need to do? Is that an acquihire? Is that a merger? Is that, what do we need to do? And the long story short is that we were able to fill those gaps, with people that we felt that were excellent, like everybody else that was in the company. And we took that company from, we increased the value of the company by 5x over 4 years, 3 to 4 years. And so there's tons of opportunity there, especially now that, again, you don't want to time the market, but market's not really happening. And so,
Right.
are what are you doing with your time?
Yeah.
How are you looking at your business, and what are you thinking about, and what can you do? It's not, the answer is not always, well, we need new systems. Let's spend $200,000 on a new
Right.
system, and we'll spend 18 months, and everybody will hate each other by the end of it, but we'll have a new system. Let's invest this in marketing. It's not always spending capital.
Yeah.
It's just looking at your company. Do you have the right people in the right spot doing the right things? And where what's supporting the company, and how, and can you make pivots within the organization to make that grow?
Yeah. So two things you touched on there that really resonated with me. And first is that idea of, what's the story of the sale? Is it of you and what you built, or of the company? And it's very often, interesting to me. So we work with companies, oftentimes preparing for sale, and from that marketing and sales perspective. And we'll sort of say like, well, who's your best salesperson? And very often the founder will be like, me, no one can sell it like I can. Like, no.
Yeah,
And I'm like, I know that you're proud of that, but that's actually a problem. Like,
yeah,
and we sort of try to lead them to that understanding without kind of saying, well, that's a bad thing. Instead, it's, well, then what do you think the new owner is going to think when you're gone? You
yeah,
don't want to be the top salesperson for the company anymore. And so it's about, sort of helping to remove that dependency. And then I also love that idea that, sort of these what are seen as cost centers, and oftentimes marketing is seen as a cost center for companies. And so often it's because they've just been trained to think about top line revenue as the outcome from marketing. But if you
right,
just shift that and think about it as, EBITDA, as the outcome of marketing, and the sort of structural and customer capital that comes from marketing that's focused on things that drive EBITDA, like getting faster renewals, larger upsells, more referrals and testimonials, then it starts to become an investment center where you can look at the forecast and say, well, for every dollar we put in, we get three out. That's also a much better story to tell,
Yeah.
that potential buyer, then, well, we spent some money and it drives some top line revenue, which keeps us really busy. But the impact on the bottom line isn't that great. And we kind of never know what it's going to be because we're always, throwing spaghetti at the wall to see what sticks.
Yeah. No, I think that's a great point.
So we talked about the thing that they sort of should be doing. What's one of the pitfalls that you see within companies that are, sort of thinking about, in preparing for, some event on the horizon? What's something they should be aware of, not just from a positive perspective of, make these uh, sort of model shifts and how you think
Yeah.
about some of that back office, but what are some things that they might be overlooking that could be a watch out?
Yeah. And so we talked about, creating or telling a story, and
Yeah.
90% of the time when your story is about the company, if you turn the page, it's about the people.
Yeah.
And it's, the what is not as important as the who.
Yeah.
Um, and I said it earlier, and I the mantra of mine is right people, right spot, right time.
Sure. Yeah.
And it's, and so if you don't have that, if you have, look, I've got my guy. He's been with me for the last 15 years, and he knows everything. And without him, I'm crippled. Um, that's great loyalty, but look at the role, and has the role evolved? And if it's the same role doing the same thing, there's some people out there that are like, hey, this is what I want to do for my life, right? That's work-life balance, et cetera. But a lot of times they're there because of, job security,
Hmm.
and they're not really adding value. And so for me, when I get into a company and I start looking at a company, a big red flag for me is somebody that says, you ask them what they, what do you do? And they're like, it's different every day. Every day it's different.
Right.
Or, I go from one fire drill to the next.
Yeah.
And invariably, my experience has shown that those people are creating the fire drills. They're starting the fires,
Yeah.
and then putting them out to elevate the importance within the organization. And so I've seen it many times, and it heightens your senses to, again, and it helped me develop my philosophy on what an organization is. And so and what good looks like. And it's, again, it's, you want to build a company where people want to be challenged,
Yeah.
and they want to grow. And so, yeah, I mean, those pitfalls are: are the people, are they
Yeah.
doing, are they doing the job that's needed to help you get to achieve your goals as an owner?
One of the great that I love that, they're the arsonist and then the chief firefighter,
Yeah,
and they love all the accolades they get for the firefighting. And one of the ways that we smoke out those folks is, by instituting process. Because once you have a process, that ensures that you sort of show up as your best self every time, whether you're busy or distracted or whatever it might be. And it very often times it's the people that are like, oh, it would be impossible to document the process that we use for this because it's just too complex or it's too much between my ears or whatever it might be. With some coaching, we'll sort of say, well, let's just kind of write down
yeah,
the outline of it, just the skeleton, the bones of it. And then from there, many people will start to realize, actually, process can set you free. It's not restrictive. It actually gives you a baseline from which you can iterate and get more creative. But then the folks that continue to resist, we're like, maybe that's the bottleneck is
yeah.
yeah,
It's and you need to be careful with the term process, not process in itself. A lot of companies, especially the lower middle market companies, they're these, I don't know, they consider themselves family businesses, right? We're all a family. We're not corporate.
right.
And so, being a, they're selling themselves to people as we're not corporate, and so process is a very corporate idea, and so it's not it has to be there, right? You need accountability in your organization if you want to maximize value. It has to be there, but how you sell it and how you implement it is really important. And so, making sure that, it's not, and I worked for a company, and worked with a company, and they were a consulting firm, and they didn't have any, they were supposed to turn their time in every month. And people were like, well, people are just watching me. And I'm like, no. And so we had to really sell why, we were doing, we wanted everybody to turn their time in, because it turned out you had about 5 people that were just killing themselves to get through this, and they needed help, but they wouldn't raise their hands. They're like, I'm being evaluated on what I can produce. And so flat out were killing themselves. And so once we got time and billing, and we got a process in place to be able to do that, and then people understood what benefits they would get from that, it became part of the culture. But we don't want to work at a place like this that tracks our time.
Right.
And it's like, look, I want you to be able to get out of here by 5:30 and
That's
go
right.
and
equally, they don't want to work at a place where their person in the office next to them is getting a divorce and losing touch with their kids because they're working all the time.
Yeah. I want you to go see your family.
That's right. That's right.
You elected to have a kid, go spend time with them. Right. So
That's right.
It's not a negative. If you throw too much at people too quickly, then that can be a negative. So it's how you work it into the organization. But ultimately it's about the benefit, right? It's about changing the mindset of the organization from being reactive to being proactive.
That's right. That's right. So you're obviously an expert in tons of topics that we could spend all day talking on, but I gotta be mindful of your time. But before I let you go, tell us a little bit about, sort of your work that you do today. Who do you work with specifically, and what kinds of things do you help them achieve?
Yeah, so I work with lower middle market companies, and founder-led organizations, and again, helping them. My sweet spot again is helping lifestyle businesses become more sophisticated and increase value, so that when the time comes, they can do what they want to do and help them achieve their goals.
Awesome.
And so I'm building out a platform. And so the easiest way to get a hold of me is through LinkedIn. It's just linkedin.com, Carter Gaither. And as I figure out this platform that I'm working on, and the partners that I'm with, we'll have something to roll out here in a bit.
Fantastic. Well, Carter, thank you so much for taking the time to join us today. I learned a lot. I'm sure our audience gained a lot from your insights as well.
Hey, it was a pleasure. It's always fun to talk about building value.
That's right.
It truly is. So anyway, thanks for the time.
Talk to you soon, Carter.
Sounds good.
Thank you for joining this episode of the B2B Growth Blueprint podcast. We hope you've gained insights to grow your business. If you enjoyed this discussion, please rate, comment, like on your favorite platform, and share to others who will find it useful. Do you know a CEO, founder, or leader at an early stage B2B services, tech, or SaaS company who would like to be a guest and share their story? Send us a note. Let's schedule a conversation.